Hello everybody, welcome to another update on the Gold Forecaster Index, the holy grail to predict gold prices. In my last video I said that gold would be going higher into the end of the year, and looks like gold hasn't done anything, but at least it hasn't gone down. It's just flat for October. So we're still consolidating and probably will go higher in the next few months. Just wanted to say that we are now in the elections, and it looks like Joe Biden is going to win, because when Joe Biden gets these three states here, then he will have 270 electoral votes, and that would make him the winner. And that's very important also because these policies will have an effect on the gold price. You also see here that the bets are against Trump here. Trump win only with 15% chance. Okay, so let's go over the gold forecast index. We got a new data point, and that data point is moving up. This data point here for September. So we are probably going to see an up move in gold into the end of the year. We also had a very good data point now for the Taylor rule rate, and I said in few videos earlier that this drop would go back up, and we are seeing that right now. We are going back into the positive territory. Not a lot, but I'm hopeful that this will go higher, and that means that we are back into the buying territory for gold. Misery index has been going down, but still up uh, compared to the previous years. Real output hasn't been updated. Supply and demand. For Peru, we have a new data point. It looks like copper production is pretty flat historically, a little bit lower than the previous years. So we won't have a lot of silver supply coming in. So that's good for silver. GLD stock level has been very stable lately. COMEX the same. China deliveries have been going down in October, so that's not a good sign. The Chinese are not buying yet. Let's hope they will come in November and December. Silver demand was also flat. COMEX the same. Central banks have been selling gold. Turkey has been selling gold, but that's only two central banks in the world, so nothing to worry about. US mint sales were very good. You can see that the US mint sales are moving higher. The premiums are still at 30%, still very elevated, so that's good. Shanghai gold premiums have moved a bit higher, but still not at the zero level, so that means that Chinese are not buying gold yet. Gold premiums are still at 5%, very elevated. And the PSLV has still to go higher to the zero level, still negative, which is not good for silver. Now the open interest COT reports were not that great. We see the commercial shorts moving higher, so this chart is going down, and that's typically not good for precious metals. Managed money COT reports also not great for gold. So technically we have some pressure in the precious metals space, but fundamentally we are still strong. Lease rates are also not great. We see that this is moving lower. That's not great. And let's see here, seasonality. We are now moving into November, which is good for gold and also good for silver. So I expect that there will be some gains here. Okay, so let's take a look at the trade balance. We had some new numbers here, and the trade deficit has moved a bit lower, but it's still very high. You can see that the trade deficit is still trending higher, but the latest data point here in September, we had a little hiccup here, but this will probably move higher in the future. I don't see any improvements. Same with the budget deficit will also move higher, and this will be bad for the dollar, which is this line here. This should move to the 80 level. That's the forecast for the US dollar index. Let's take a look at the CPI. University of Michigan inflation has been going down a bit from 3.1 to 2.6. So inflation is muted for the moment. But I expect that this should go higher when Biden wins the election. You can also see here that the producer price index is moving higher. The same with the CPI. Capacity utilization has been moving lower, which is not good. We want to see this higher. And this is also evidence that inflation is muted for the moment. Central bank balance sheets. Let's take a look here. Well, the ECB has been printing money. Balance sheet has been going higher, and they said they would add more stimulus in December. So I expect this to continue higher. For the Federal Reserve, this trend is also moving higher. And this results in money supply increasing, but it's not increasing at this pace anymore, so it's a slow increase, kind of a disinflationary period, but still inflationary. Oh, I calculated here that based on this money supply increase, we should be at $6,800 gold price. So that's still the target here. Okay, so now I wanted to talk a bit about the thermodynamic oil collapse because this was a very good video. This was a video from SRS Rocco, and there was one very important chart in there that I wanted to share. That's this one. So basically, this gives a timeline from 1900 to today, and we have oil production, which is the blue line. You can see that this is going higher and higher, which means that GDP is also going higher. But at some point, something happened in 1980. So what's the green line here? The green line is the blue line, but minus waste heat. And when you produce oil, then a lot of that energy will dissipate, and that's called entropy. You will always lose some energy through heat. So the blue line goes to the green line, and this is actually the real production of energy that is going into the system. And there's also a lot of lost energy here, which is this line here. This is net energy used by the petroleum production. So to produce oil, you need to do a lot of things like drilling, transport, uh, refine it, and this is the amount of energy that is lost. And then you get this orange line, which is the net energy that's going into the economy. And this is very important because this line is the actual energy that's going into the economy and will provide GDP growth. And that has changed in 1980. It has gone down and is probably at zero almost today. And this is correlated with bond yields because bond yields are correlated with GDP. And you can see here the same growth went up until 1980s and then went down to zero. And this is what we see. GDP growth is declining. Now, what is the problem here actually? The problem is that we are using bad energy, energy that is not efficient. We have different kinds of energy. So this is the yield. So oil had a very nice yield somewhere in 1950. And as oil gets depleted, the energy yield goes down of oil. And at some point, this is coal, for example. Coal has a very good yield. If this is above 1, then you have a good yield. So that's a good yield. Nuclear power is also very good. But then you have this here, oil shale gas. This is below 1. That means that when you produce oil with shale gas, you will not have net energy added to the economy because you will have a lot of debt to produce this oil. So this is very bad energy, and that's why also all these shale gas companies are going bankrupt now because we don't need them. Um, let's take a look at some other energy. You have photovoltaics, which are also very bad kinds of energy that are completely inefficient. Ethanol also, well, it's above 1, so this is still okay. Then we have oceans, thermal energy, and wind is very good. Hydropower is good, and tidal wave power is good. So using the waves of the oceans up and down to create energy is apparently one of the best kinds of energy in this world. And we should have more of these things here and less of photovoltaics. And this is also why I'm getting to the next segment here, why the elections are so important. So we have probably a contested election. We don't know yet who will win. If Trump wins, we get 4 more years of this here. A lot of deficits, increasing balance sheets, no wage growth, companies and billionaires get richer. If Biden wins, on the other hand, we will get something else. We will get clean energy, which will bring silver much higher because clean energy means a lot more solar demand, photovoltaics, more electric vehicles, and those need a lot of silver. But as you have seen in the previous slide, if you use these kind of energies, photovoltaics, then you do not have a lot of net energy into the system. And that means that the economy won't do well. So GDP is going to go down due to using of this clean energy because Biden also wants to get rid of the oil sector, fracking, and he wants to reduce carbon energy, and that will be bad because then you are reducing this kind of energy, coal, oil, and these are also very efficient kind of energy, and we need them. But Biden is going to get rid of these and go into the photovoltaics, which are inefficient. So that will lower GDP. Another thing, Biden will be taxing the corporations. That would bring stocks under pressure. I think he will increase the taxes by 10%. So we will probably get lower GDP, lower stocks. Uh, well, there's one positive thing is that Biden will probably get more deals done with China. It's not a guaranteed, but there's more chance. So you could start buying stocks in China. We also will have a lot of universal basic income, a lot of stimulus measures, stimulus checks, and that will bring consumer inflation. So you will see the CPI go up together with gold, of course. And the US dollar is going to crash because of a lot of debt that will be created by the Biden administration. So how are we going to play this? We know that we have a contested election probably. We still don't know who will win. And typically when this happens, just look at the year 2000. When we have a contested election with recount, then gold typically moves higher. Also, these are good seasons, November, December, good seasons for gold to go higher. And that is also my prediction. Uh, just keep stacking. I think that we are in a very good environment here. We also know that Biden is probably going to win, which is good for silver. So I would stay in the precious metals, and I will see you in the next video.